From Barangaroo Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
All right, welcome to the COB. I'm Juliette Sarli. This Wednesday, very much in the midst of reporting season. Let's have a look at where the local market has finished the day. Weighed down today by the banking players. Of course, NAB's quarterly earnings are sending its share price down the most in around 5 years. We also had MinRes tumbling, wages growth slowing to a 3-year low. And a lot of a switch out, I guess, of those banking stocks, with some analysts saying that the plunge that you've seen potentially in NAB today could be the start of the bank correction that a lot of analysts have been saying would be coming, in terms of the fact that they obviously had a great 2025. So that is one of our themes of the day. Banks burst, or has the bubble burst? Are we going to start to see some of those banking players, particularly the likes of CBA, which has fallen for a fourth session today, had been defying analyst predictions that it was overvalued and climbing to fresh records, particularly in the wake of its result last week, but has now slid for 4 consecutive sessions. Also, weak wages. Look, if you're wondering why it seems like you're going backwards, Australian wages rising at the slowest annual pace in almost 3 years. Economists saying that this is not likely to add to any inflationary concerns, so should just continue to add to that case that the RBA can continue easing. Of course, Michelle Bullock saying yesterday at the conference following the meeting that the strength of the employment market is one of the reasons why they are cautious about cutting aggressively further. Meanwhile, our friends in New Zealand continue to cut aggressively. Another 50 basis points today, taking the official cash rate to 3.75%, and the RBNZ flagging further cuts ahead. We've also got the FOMC minutes coming through tonight, so very much on central bank watch. Let's have a look at the sector moves. We mentioned the banks coming under pressure. NAB shares, I think they're at the lowest in about 2 years, but certainly the biggest one-day plunge we've had since the COVID pandemic. ANZ off by 1.4%, CBA down 2.4%, Westpac and Macquarie also under pressure. Also looking at the weakness in the energy space today. Woodside, Santos, of course, which came through with its numbers falling quite substantially. And Beach Energy had a really, really good chat with Blackwater. You can find that on our website. That's one of their favourite picks in the small cap space, Beach Energy. It fell 0.7% today. And a quick look at healthcare stocks, CSL and Cochlear moving higher, along with Sonic, of course, on that defensive play. NAB, having a look at it, of course, falling from near record highs after profits slipped below expectations in the December quarter. It had, a lot of competition for loans and also people not making their payments, which really weighed on its bottom line. MinRes falling by 21% after posting a loss of more than $800 million and axing its interim dividend. James Hardie shares, though, lifted after earnings came in slightly ahead of consensus. Earnings coming in at $206.1 million, down 9%, though, due to a decline in volumes in what they called a tough market. Corporate travel up 10%. It did have a drop in profit owing to issues with its European division, but it gave a pretty good outlook for the full year. And the Lottery Corporation up 3%. It retained its dividend and said performance had been resilient. And you know why? Because nobody won the big jackpots. And also the mega draw for the end of the year, which normally happens in December, happened in January. All right, welcome to the COB. Mark Gardner from MPC Markets.
Good afternoon.
Good afternoon. What are you seeing in this banking pullback?
Well, look, I mean, they're overvalued, but that doesn't necessarily mean they go down, particularly when there's those ETF flows coming in and just backing them up. I think what earnings season is really, I mean, you look at the headlines and the mining stocks look like they were horrible headlines. If you read the AFR, you would have been selling. And I think that rebasing or revaluing is just coming back in now, where we've essentially got, the banks, everyone's realising that with the earnings coming out, that the banks, are genuinely, there is not a lot left in the upside there, and even with the mining stocks, that a lot of bad news was already priced in. So I think they had a 40 or 50% divergence something last year, which is one of the biggest on record. So and it's really one of the only places you can get decent dividends in the resources sector. So I think this is just a bit of stabilisation. Some under the pump stocks like Audinate and corporate travel, obviously, they've had big results to the upside, but look, it's really just a normalising, and that's the disadvantage of having biannual reporting, is that the numbers can swing quite a lot. So and you can very much get stuck in a position for months at a time, which I guess would increases the emotional anxiety.
How have you viewed reporting season overall, though? Because most people I've spoken to have said, look, pretty optimistic.
Yeah, it hasn't been too bad. It's generally just been more. I think the opportunities have been in those really unloved and undervalued stocks that may have had a milder outlook last earnings season, and then just got left for dead by the rest of the market. So I think James Hardie did well today as well.
Yeah.
Corporate travel was just insanely undervalued at where it was, and it's a debt-free company that it's net profitable. It's had its issues, but when that stock was trading somewhere in the mid-20s 18 months ago, 2 years ago. So I don't think it'll take much for it to get back on track at some stage. It's still found a lead. So there's been pockets of real optimism. I think Matt Commons' comments, CBA, really. I think the economy's in better shape than everyone says.
Yeah.
And and obviously, but now we've got the rates thing out of the way. I think that was a lot more line ball than yesterday. I think if there wasn't an election coming, they wouldn't have gone, judging by the comments. And I think she basically just bowed to political pressure, realistically, because if she goes in April, she's influencing the election, or will be accused of. And that's the problem with the media getting on the back of the RBA reduces its independence. And I feel she's bowed to public pressure there, because a 10% drop and a sustained 10% drop in the currency, which we have had, equals 1% inflation. And that's coming. And we're not shipping as much to China at the moment. So our exports, that we're not getting the uplift benefit of basically having our commodity prices lower because of our currency. We're just importing all the inflation. So, I don't think those inflation numbers are going to necessarily improve, and I don't think we're going to see any more moves until later in the year, at least until the election's out of the way. And it's that uncertainty with Trump. Obviously, he's still talking tariffs, and that's going to be short-term inflationary. CPI and PPI were both hot in the States. I think we're at a real risk of inflation rearing its head again.
And then maybe would they have to reverse course and hike again?
Yeah, look, without an election, I'm not to say that the RBA wouldn't have had to have gone in the coming couple of months, but I think the election forced her hand, because if she leaves it too late, then realistically she's got to wait till May. So, but I think. I don't think we're going to have to. I don't think we'll be reversing course anytime soon. The average is 500 odd days between cycles generally. So we'll certainly see. But I think as you can see in the price action in the likes of gold and silver and things like that, the market is getting a little bit more uncertain.
Yeah.
And those trades that were really, really good winners last year, the Mag 7, obviously the banks and things like that. It's been pretty volatile at the top of the range for Hub as well, despite an outstanding result. So you can sort of start to see a little bit of profit taking starting to come in, a little bit more, people being a little bit more reasonable about future prospects rather than being, just blindly bullish.
Yeah. All right. So what do you think then in terms of when we might see another rate cut? And I guess also the differential of what we're seeing with New Zealand. They're flagging more jumbo cuts potentially. Yeah,
but they don't have capital gains tax. They're a completely different economy. They're geographically close, but apart from that, we both play rugby. I think that's about the only thing the two economies have got in common. And so I don't really put too much into into the RBNZ. And look, as I said, they're only coming back down to 3.75. What are we at, 4.1 now? So it's not that much different, and they've just come back. So I think people lost perspective of the fact that we didn't hike anywhere near as much as well. So I think the election will have to get out of the way, and we'll have to see a few more numbers. But I think the next one, if there's a next one, will be in the back half of the year. But I think if we start to see those inflation numbers tick up, or the Fed, the minutes are out tonight, and they've been talking about inflation for a few months now. If they start to be really concerned about it, it might increasingly take them off the table. So, and we're still on a historical basis. If you're going back more than 15 years, we're about average. It's how the economy used to work before we got addicted to zero rates. So I think there's there's an argument for normalising because otherwise you end up having a very boom and bust economy. So money's got to cost something, and we can't be sitting at emergency rates for long periods of time. So even if we do get 1 to 2 more, we're probably not really going beyond 3.5. An absolute max, I would have thought. So
the problem, I guess, is a whole, not sort of generation, but a whole cohort of people that borrowed, as you say, when money was easy, and are kind of expecting it to potentially go back there. Yeah.
Yeah. So I mean, you'd probably expect mortgage growth to be a little bit capped, but Australia keeps importing millionaires. I think we've imported the most amount of millionaires in any other country for the last 2 years. So that. It's not going to solve the housing problems either. So it could be a whole raft of changes. Even here, I think Dutton's very extreme on a few things as well. So, and is obviously getting a little bit possibly carried away with trying to mimic the Trump action. So it'll be an interesting year. So I think gold and silver will probably continue to go up.
Yep.
And the positive price action, despite the fact that we've had a rising US dollar, really makes me think that they're very ripe for a pop.
Yeah, all right, I'm going to keep all my wealth on my arm. Mark, thank you. Mark Gardner from MPC Markets. All right, we talked about corporate travel, and that was the stock of the day. Andrew Wylant from DP Wealth Advisory and Henry Jennings from Marcus Today joined Nadine.
And if you have a look at the percentage of the company that's short sold, so in other words, investors taking a view that the share price will fall, it's remembering if you short a company and you get the call wrong that the share price is going up, your loss is unlimited. So if you go to short a company, the result is actually better than you expect. Share price rallies, you're madly in there trying to cover your shorts, you're buying them back. And I suspect that's a lot of what's actually going on today.
They're not particularly great, and expectations were particularly low in a number of cases. The same, I guess, applied for Domino's, where there was a big short position there, and that one went on an almighty run. The same thing happened the other day in Ordinate as well, which had a big run as well. And now we've got corporate travel joining that. Again, they did beat expectations. The shorts cover, we may see a little bit more short covering in the next day or so, but then they do tend to come back to earth a little bit.
All right, coming back to earth, let's have a look at the leaders on a downbeat day. Corporate travel we just discussed. Light & Wonder, an $850 million acquisition of a company that has thousands of machines across 5 states in the US. Data3 also had a good session. Ventia Services, Andrew had a really good chat earlier with Matt Griffin from Maple Brown Abbott about that. You can catch that online. Fletcher Building also higher after its result to the downside today. Mineral Resources, we touched on that. Star Entertainment once again falling down. NAB having its worst session in around 5 years. Ordinate, Mark Gardner was just talking to us about an Arena REIT down by 5%. In the small end of town, Southern Cross Electrical Engineering. I had a really interesting chat on this stock with Jonathan Higgins. That's on the website. He really likes this stock, sees much further upside, 14% pop today. These are some of the other winners on your screen. Biome, Lindian Resources, Legacy Iron Ore to the downside today. Step One came through with an update. The underwear company falling by 25%. Star we touched on, and Electro-Optic Systems down by 8%. Tonight, of course, we get the minutes from the FOMC. Also in the UK, some CPI data and US housing starts. Tomorrow, another busy day on the reporting calendar. We've got Telstra coming through tomorrow, Rio as well, Fortescue, Telix, and it used to be Pilbara, but it's now PLS or PLS, as you type on text message. Labour force data as well for January coming through, and we'll be talking to Bjorn Jarvis from the ABS just after that data is released. A down day on the market today, really dragged lower by those financials. Are we starting to see the switch that everybody has been talking about? Off by 0.8%, 1602 is where we sit, and having a look at where the ASX 200 is, down 62.7%, 8,419, crossing below its 20-day moving average, and down 1.4% over the last 5 sessions. All right, we'll be back again to wrap it all up for you from 9:45 a.m. Eastern tomorrow. We'll see you then.